Okay, this is just to write down some lessons that I've learned uh, so far. It's only been like 2 days, but some of these things I knew before, and some of these things I want to note again. So the first thing is this open, right? Trading during the open. So I used to do this, and I think it's really bad. I think that this causes a lot of problems trading during the first couple minutes. But I think it's not really like it's not this simple, right? It's not like don't trade first 30 minutes. It's also not like 15 or 5 or whatever. I think really what it is you need to wait for the market to sort of shake off that initial chaos, right? And so like if you just mark out, okay, there's the open. That's a terrible color. There's the open. Then you can see the market traded lower. It traded past all of these lows. Then it traded aggressively higher. And, you know, I might make the mistake here of being like, oh, look, we traded below and then we traded higher. Look, it's a market structure break. Let's long the breaker, whatever. But really what's happening here is the market's probing lower and then it's probing higher. But it hasn't actually decided on a direction yet because there's just so many orders hitting the market around this time. So it's really, really erratic. And so you want to wait for it to actually probe both directions. Okay. And so if you look on this day before, you can see market opened 9:30 is here, but it actually just chopped for a really long time, right? And so it tried to go higher here, 9:49, and then it traded lower, and it's been 30 minutes now. It took 30 minutes to actually try to go higher and try to go lower. But then once it's done that, then you can trade, right? And so the second thing is to always mark out the RTA or the ETH high and low, right? So you have, if you look here, you can see that this was the previous trading day. You traded lower, and then ETH starts here, and then this is the 9 a.m. candle. This is where trading actually opens, and so the ETH high is there, and the ETH low is there, and it doesn't happen every day, but it happens often enough that you need to be aware of it, or I need to be aware of it. I'm really talking to myself here. I need to be aware of the ETH high and low every single day, right? There's really no excuse not to be, because these levels are very common. It's probably like the best reference point throughout the day. And so you can see here, like when it tried, it was sort of just chopping, chopping, chopping. It tried to push lower. It pushed into the ETH low, and then it started breaking higher. And this is like bread and butter. I mean, this is like the most bread and butter setup that you can imagine right here. You can actually treat the ETH as a range. And if you do, then yeah, you can see that maybe that's a bit of an aggressive target, but still, like, yeah, like that's very basic and very obvious. But it's only obvious because you have the markings, and so that's something that I need to have. And and so today, today I had this bearish bias because if you look on the hourly, you see basically yeah, lower high, lower high, lower high. Market broke lower, and then we run these highs. Just in general, like when it goes lower and it goes sideways, and then it tries to push higher, oftentimes it's going to trade lower. And so I was like, okay, we traded above these highs, we probably want to go lower. And we did on the open, right? You see market opens, trades lower, trades higher, trades lower, so it rejected the higher prices. And so I'm like, okay, this is bearish. Let's get short here. Okay, pretty good idea. Decent entry, decent everything. But I was going for this swing low because this was previous day's low. And I think that's reasonable. I think that's okay. But I think if I had marked out and if I had been aware of the fact that this is ETH low, then once we rejected it, I might have exited earlier. Whereas now I only exited like, you know, much later. And so I think I might have, perhaps this would have been a better target, or perhaps I would have at least been aware of it, because now I just thought like it's just like a swing low, like it is what it is. Um, but now I was much more aware of it. Okay, and so then finally the last thing is don't anticipate the range breaking. So if you have a range, that's just ETH high and low. If you have a range, actually we can just hide everything. If you have a range and the market is ranging, then you don't want to anticipate on the range breaking. So you don't want to say like for example right now, well that's gonna cause everything to appear. But right now, the market is how the hell do you there you go. Right now the market is at range high, right? And there's some momentum and stuff. So, some people might say like, oh, it's gonna break now. It's gonna like go all the way up to the next resistance or something. But whenever the market is in a range, you just don't ever want to predict it breaking. So you just always want to like stay in the range. And so if there is a good short setup, I will short. If there is a good long setup, I will long. And you don't ever want to predict that it's going to break, because the markets generally range more than you think they will, right? I mean, more the ES likes to chop and range like 70-80% of the time, and we know that it's mean reverted by nature, and so it makes a lot more sense to just try to always short range high, long range low. And so this is an example of me making a mistake here where, I was looking at this on the hourly and I was like, oh look, it's kind of bearish. We tagged the range high, that means that we're going to go lower. That's not true at all. And basically here on the M1, I was like high, lower, high, lower, high, lower, high, lower, high. I was like, okay, this is gonna break. And so I just shorted here, DP here, at this swing low here, daily swing low. And I just ate shit, because I'm just like taking a trade, actually not even in the middle of the range, but actually at the bottom of the range. Like if you zoom out, like I was shorting here, which is clearly like towards the bottom. And so, yeah. And so that the same logic goes the other way. Like you need to be confident on your good trades where you are longing range low. Like here, I think this was pretty obvious. We have a strong demand zone, strong move away, price spends time away. Okay, come back in, price broke structure as well, come back in, and you can target the range midpoint, which, I treated this as the range here. Target range midpoint, perfect, right? And if you zoom out, like, does it make sense to be long in there? Yeah, it makes sense to be long in there. Fine, because it's the range low, and so, yeah. So I think that is that is something that makes a lot of sense to do, and obviously you could use that logic to also be like, hey, you shouldn't even take this trade at all. But the reason why I was taking this trade is because we have this overall bearish bias and we failed at the range high, which made me think, hey, now we go to range low. But there's a difference between, hey, now we go to range low, and there's a really good target at range low, which is the RTH target, instead of thinking, hey, now we're going to take out the range, which is, something you should never, ever, ever bet on. And yes, it is currently going higher here. I appreciate the irony, but it's just not ever a good idea to be like, oh look, it's bullish. Like some people might say like, hey look, like there was like a bullish order block here or something, like why don't we long here? Isn't this like a great long? But you just don't want to bet on the range breaking. And you do want to bet on the range holding. And so I think that was my mistake here with this short. It was a good idea, We saw the price action, okay, try lower, try higher, okay, we want to go lower. And there was the overall bias and confluence. I just picked the wrong target because I was basically betting on the range breaking, or at least expanding, whereas I should have been targeting the ETH low because that's a very, very good target. So that's just 3 things that I've been thinking about. So let's recap. 1, wait for initial battle at the open. Can be 5 to 30 minutes, maybe even longer, I don't know. But yeah, probably first 5 minutes you pretty much never want to trade. But yeah, you want to see that initial battle play out first. You don't want to be the guy that gets caught up in the chop. And second is always mark ETH high and low. They are some of the best levels. And then number 3 is never bet on a range breaking. Okay, so hopefully this is going to help me be a couple percent better at trading in the future.